General Motors just announced it will offer buyouts to a majority of its U.S. workforce in an effort to save money.
This comes as new unemployment claims rise to their highest levels in 5 months. The number of people filing first-time unemployment claims last week increased by 21,000 to 211,000. That was the largest increase since October and lifted claims to a 2-month high.
Joining us now is Daniel Altman. He's the chief economist for the flexible job platform Instawork. Daniel, I guess everybody wants to know what's behind the rise for this week's unemployment claims. I guess the obvious question is it must have something to do with recent layoffs in the tech sector. Is that a fair assessment?
Well, actually, the tech sector is a pretty small part of the overall labor market, Jim. And what we're probably seeing here in these numbers, which bounce around quite a bit, is some regional effects in California and New York probably contributing the most. And also, you have to have income for a certain number of quarters in order to be eligible for UI benefits. And as a result, some of the people who were on extended UI benefits through the pandemic may now just be becoming eligible again. But I think the overall message is that we're seeing some more of this cooling of the labor market that we saw in some other earlier figures on layoffs and job openings this week.
Daniel, in January, the number of job openings fell to about 10.8 million, but that number is still considered high. What do we expect to see when the February jobs report comes out tomorrow?
The February jobs report is probably going to show just a little more of that cooling or perhaps even sort of stable conditions. The labor market is very similar to where it was before the pandemic. We have similar unemployment rate. The employment to population ratio for workers who are aged between 25 and 54 is about the same as it was then. Those are your sort of prime age workers. And so we have a very similar labor force. But before the pandemic, we didn't have very much inflation. Inflation was at normal levels. So what the Fed is looking for here is for the labor market to cool down a bit. But actually, the labor market might not be the biggest source of inflation.
They'll be looking very closely at tomorrow's report. So in terms of the Fed, and the impact on potential interest rate hikes, what's your sense?
There's no doubt that some of the stronger inflation numbers that we saw in the past couple of months have opened the door to a 50 basis point, that would be a half percentage point rise in short-term interest rates. Before, I think more people were expecting a 25 basis point or quarter point rise for this meeting and maybe the next meeting as well. I think the Fed is considering sending a message that they're still very serious about making sure that inflation comes down. This is really now a game about expectations. They're trying to set people's expectations about inflation so it doesn't become a sort of self-fulfilling prophecy.
All right. Lots of news that we'll have our eye on tomorrow, that's for sure. Daniel Altman, thank you so much for your time.
My pleasure.